So we move into part 3 here. We're going to just kind of do some quick announcements and a little bit, looking forward on what our plans are for the remainder of 2026, both on the acquisition, refinance, disposition side. So first off, our biggest announcement thus far of 2026 is the sale of Belmont Heights. 176 units in Belmont, North Carolina, 80s, 90s vintage, primarily brick townhomes. It was 2 properties, 2 phases, kind of melded together. This was our first acquisition, at re-entry back into the market in January of 2024, during this reset that we're living through here. And it was acquired from a group that was getting out of multi. They were self-managers, kind of in liquidation, disposition mode. Property was really undermanaged. We loved the Belmont story. I think it's a great town, great submarket. Property, again, didn't have any sort of utility chargebacks in place, was underperforming on occupancy, other income. The pool had been down for 2 years, out of service completely, needed a new pool. And we felt that the neighborhood and the submarket and the comps justified the ability to go in and, again, bring URS management to the table, invest some capital, and bring the property up to market standards. So we invested probably about a little over $1 million, $1.1 million into the property quickly. Our team did a fantastic job. We did some interior renovations, but we really invested heavily. We put a brand new pool in, dug it out, pool area, kind of outdoor grilling area, some fire pit space, some connectivity of the 2 phases, power washing, landscaping, consistent unit turns, good maintenance, great service in the office. And we were able to really grow the NOI meaningfully over the 2-year hold period that we had, and just saw it as an opportunity, again, to have a capital event in a pretty tough environment. Since this property, we've gone on to do 10 transactions over the last, 2 years now. Between 24, 25 and Q1 of 26, we'll have done 10 acquisitions, 12 properties. So, this was a way for us to realize a win for our investors, recycle some capital. It was a little bit of a smaller deal and quirky vintage profile for us for the long term in terms of where we're going. And we were able to realize just about a 22% project level IRR, 1.5 multiple in a 26-month hold period. So, really happy with the results there. Team did a great job, and couldn't be more proud of being able to execute and take a deal full cycle in this environment. Not an easy thing to do. So next 2 slides are going to be welcoming some new team members, one being Jill Warner from Savannah, Georgia. She joined our team as a senior regional manager to take over our coastal portfolio. She's got a great background, great energy. Very, very happy to have her on the team. She's definitely making an impact, from day one, has already gotten out, visited all the teams in a matter of a couple of weeks here. Highly engaged. And I think for where URS is going and our long-term growth plans, we're really trying to be very, very strategic on our hires and, being very thorough and diligent about who we bring in to kind of oversee their respective portfolios and groom kind of the next stage of managers and ACMs and maintenance supervisors and technicians, et cetera. So really thrilled to have Jill on the team, and look forward to, seeing what she's going to do for her portfolio over the remainder of this year and in the future. So in keeping with some of the new announcements, we've also brought on a new analyst here in the office in New York, Zachary Rares. Really, really sharp, highly motivated young guy with, great pedigree. Came from spending several years over at RXR, so we got great institutional background in fund management, asset management, acquisitions, underwriting, etc. And Zach's come in, just full throttle, running 100 miles an hour here in the office. He's first line of defense on all the deals that Chris and I get called on, are sent to him to pull down information, get him in the pipeline, do a scrub, do a screen, tell us what you think and where we want to put our energy. So it's great energy, great to have him. He's definitely established a presence for himself already here in the office. And also want to recognize and welcome Jamie Kopczynski. I do my best, Jamie, on that one, but she was another great addition from our COO, Jen O'Brien. They had worked together in the past, and Jamie, came in just depth of experience at the property level accounting and financials to assist the site teams and take some of that workload off and help train them and retrain them on understanding the financials and entries, et cetera. Great addition to the team, as we continue to, again, firm up for the long term here. We're looking at great talent, smart people that are hungry and motivated, and Jamie definitely checks that box. So really happy to have her on the team. So as we wrap up, just talking about our plans for the remainder of 2026 and where we want to go, we want to continue to acquire through this, again, good assets at a really attractive basis in submarkets and markets that we want to be in for the long term. I've said this is my these are our 3 core values that we stay true to. Do we want to own this asset for 10 years? Do we want to be in this market for 10 years? And are we capitalized appropriately to own it for 10 years? That's the 3 unwavering questions that we ask ourselves before we move forward on any deal. And if the answer is not yes, then we're not going to buy that deal. There's just too much out there in terms of deals being thrown around to sacrifice any one of those 3 core values. But what we're seeing in real time is, some of what we thought was going to happen, a year ago or 2 years ago, it's slowly starting to show its head in very isolated spots. There's not severely distressed sellers on a mass scale. The motivation is increasing. I think lenders have run out of time and extensions. So we'll see. Everybody on LinkedIn's got their own theory and thesis on, when's going to be the perfect time and what's going to happen. We don't try to kind of call a bottom or time anything perfectly. We know that, that it's nearly impossible in any market. What we're trying to do, again, is continue to acquire during this time of dislocation. We know that we're getting great value relative to a normalized market conditions, meaning not motivated sellers, stabilized interest rates, normalized supply. When you take stabilized interest rates and normalized supply and get normalized rent growth, meaning historical averages, 50-year historical averages of 2 to 3%. I'm not talking about 5, 10%. That's going to be in certain submarkets. I do think that happens at some point over the next 5 years. But when you start to normalize supply, normalize rent growth, and normalize interest rates, there's a massive amount of liquidity that is starting to be deployed that needs those 3 things to stabilize. And quite frankly, we're opportunistic. I don't want to wait for that time to happen, because when that happens, we are going to see prices run because people are going to start paying forward for that last 20% of trade outs that is up 3%, they're going to start marking the rent rolls up 3% and paying on that number. Liquidity creates value in any asset class. When there's more liquidity that comes into it, values rise. When there's less liquidity, values come down. We are in that less liquidity period. And again, I've said this earlier, I know that we bought some of our deals probably a little bit early in our submarkets in terms of supply absorption and getting to the other side of that. We're okay with that. We're capitalized appropriately to manage through that because I believe in the underlying asset, and the basis that we acquired at is extremely attractive relative to today, to 5 years ago, and in some instances, even 7, 10 years ago. The basis still looks attractive, and then add replacement costs to that, and it looks even more attractive. So I feel great about that. We want to continue to keep our head down and pluck off deals one at a time, take the sniper approach. When we see something that we're excited about, a submarket, an asset profile, and a basis, we have conviction and we want to move. And we lock in, we get very, very focused on that. We have a couple of deals that we're working on right now that check a lot of our boxes in terms of forward-looking supply, diversity of employment, great basis relative to new product, long-term ownership. Groups own 2 of these deals for 15 plus years. So they're not maximizing operations. They don't need to maximize operations. We don't need to underwrite, outsized rent growth to get the deals to work. We've got a distressed deal that we're looking at, highly distressed deal from a lender that we've got a 5+ year relationship with, that we know we're not the high bid, but they know that we can provide them certainty of execution. So we're waiting to hear back on that. So we're really excited for what's out there. We are, very cautious in where we pick our spots to shoot. Again, we compile so much information and data on the market on a daily basis in terms of deals being brought in the door, what the pricing guidance is, what the cap rate sold at, how the debt's being, financed, where rates are, where spreads are. So like our pipeline is probably one of the most important documents that lives in our world. And I am absolutely obsessive about ensuring that, Zach and our team have that updated with every single deal that comes through our door is on that pipeline. And then we're scouring our data sources every quarter, as you saw earlier in part 1, to collect all the information of every transaction that's happened in our target markets. So I have reference points when we're looking at the market and looking at the basis that we have under contract relative to the most recent trades and how the market's viewing similar assets. So long and short, for the remainder of this year, our focus and goal is to buy another 2 to 3 assets between now and year end. We're expanding our investor base. We've got great investors that have been referred to us from our existing investors. We're very excited for that. We've got a significant amount of interest and conversations with some individual family offices, ultra high net worth individuals, and some kind of mid-market, funds that deploy equity in sponsors of our size in $3 to $5 million ranges. So we've got a lot of good things going on the acquisition front. Operationally, we continue to every single day strive to do better than yesterday. I am very, very hands-on in that space. I talk to our COO on a daily basis. I'm in our revenue management platform on a daily basis, probably more than our teams would like. Tom in our office that has been with us now for over a year, eats, sleeps, and breathes the asset management side. That's his number one focus. We are constantly evolving there and looking for great people, great systems, great processes to drive property performance. And that's the number one goal, is property performance. And it's easy in today's world to get lost in a lot of the technology that's out there. So it's a very, very fine line to where we have to focus on what's important, right? And that's marketing, which is driving traffic, tours, leasing, renewals, and maintenance, right? Those are the baskets that we ensure are getting done every day. And we know that, we're not the best out there, but we strive to be the best that we can be day in and day out, and constantly finding ways to improve. We have at least one refinance that we're going to be tracking today on a deal that we bought about 8 minutes. It'll be about 16 months ago. We bought it, 20% occupied. It's been over 95% now for the last 6 months. So we're trying to get our trade outs up in spring leasing season. We don't want to rush to refinance. So we're tracking that for Q3, Q4 refinance. We don't have any other sales on our pipeline at this point. And we want to just focus on continuing to fine-tune our portfolio, optimize operations, and acquire great assets for the mid to long term. So I really appreciate everybody taking the time. If you made it through all 3 parts, you get the reward. It's a lot of information. For those of you that might be interested in investing with URS Capital Partners, again, please reach out to Rebecca at urscapitalpartners.com. Be sure to follow us on YouTube, specifically at URS Capital Partners. We house a ton of information there. Our website Instagram, Facebook, LinkedIn. I'm pretty active on LinkedIn. So please feel free to follow us, and look forward to hopefully getting to meet some new folks soon. Take care.